Good morning. This is Tom Alexander. It is Sunday, January 23rd here, and it's about 9:15 a.m. on Sunday morning here in beautiful Charleston, South Carolina. A lot to discuss. We have a lot going on, and as a reminder, you should have access to the written report, and in that written report, there is a registration for a webinar. A special webinar that I'm going to give tomorrow, Monday, January 24th. And the reason I'm going to do that is because we are in a really interesting time frame here. The volatility is picking up. The markets are approaching critical levels, and the downside is extremely compressed by several measures. So we are rapidly approaching levels of compression to the downside that we have not seen since March 2020, and by some measures we are approaching those levels. Now, you have to be careful in an environment like this because it offers opportunity, but volatility is a two-edged sword. So I will, caution you a little bit. I would suggest trading lighter in this increased volatility. Being patient, being disciplined, all the things that I try to get people to adhere to, they're all good tenets regardless of the level of volatility, but particularly in this level of volatility. Also, if you have not subscribed to the channel, please do so. And if you like the material in the video, like it. Thank you. Okay, moving along. This week, I'm going to begin where I typically do not begin. I'm going to begin with a profile chart. Now, the profile charts that I'm going to show are those of the weekly time frame where each letter represents 1 week. I think that in times like this, perspective is important. I think most traders have a tendency to become too myopic. Let me start my screen here. Okay, so this gives us a little bit, it gives us some good context from a number of different perspectives. Again, this is a weekly SPX. We are about to begin the fourth week of the first month of the year. And you can see on my screen here, we are rapidly approaching a downside level. You can also see that this is a very early phase in this quarterly. These are basically quarterly auctions. We're already have quite a range in this particular quarterly auction. Now, my best guess is, and emphasize guess, is that this level highlighted on the screen, and I'll show you the bar charts in a few minutes, it's clear there. I think we will get some sort of pushback from that level in a more two-sided trade. We are extraordinarily vertical in these markets, and I'll talk about that again in a minute. But this is the SPX. Here is the Dow, and you can see the Dow is just about as vertical as it can get as we head into this downside key reference area that includes the October lows. I mean, the third quarter lows, the second quarter lows. It's just as vertical as you typically see on a 2-3 week basis. And let's see, let me find my, here's my NDX weekly. And you can see the NDX is already at a critical level. Below this level, you're increasingly into guess territory. And a guess would be somewhere around, the upper cusp would be around the 14,000 level. But you're not going, as I've said many times, those of you that have been around for a while or years know that, the way that an auction market develops, you're not going to continue at this rate of change. Now, it may seem like it, you may think we might, but we're not. We won't. I'm certain of that. Okay, Mr. Russell. The next level in the Russell is not too far away. We broke to the downside out of this almost year-long balance area. And you can see we're in a similar process in terms of this quarterly auction. We're in the process of establishing a distribution range. And we're in step one. For those of you that understand this auction process, you have 3 steps of development in all markets and all time frames. Is from a auction market perspective, step 1 is a vertical move, can be up, can be down. This is down. Step 2 is a stopping price. Step 2 cannot be identified except in hindsight in when rotation begins. And we have not, we don't know if we've even, we don't know if this trend, this step 1 is complete yet. I think it's closer. I think it's close to completion. Talk a little bit more about that. Okay, let's take a look at these charts. Okay. Now this is a chart I've been showing lately, and the red arrows are option expirations. The green arrows are days on which NYSE breadth closed at -2,000. Now, it was remarkable off the March 2020 low. Every time we had a -2,000 breadth reading until recently, we would put in a momentum low that would be indicated by that -2,000, that would be coincident with that -2,000 breadth reading, or we would have a slightly lower price low on less breadth and the market go ripping higher. That's different. I've talked about that over the past couple of weeks, how things seem to be a little bit different this time, and indeed they are. Now, we are also down in the S&P. Let's see, we've made lower highs, 1, 2, 3, 4, 5, 6 days. Going back past the March 2020 low, I didn't go back years, but the last time we had a -7 consecutive negative closes or lower highs was March 2020, right off the top, and it didn't occur again. I don't think there were 3 consecutive lower highs following that. But that's another story, I'll get into that in more detail in tomorrow evening's webinar that you can sign up for. You have to be a member. You can see the details in the report, but we will cover that. I think Sunday night Globex and Monday are going to be really interesting. Will give us really important pieces of the puzzle. The other thing I've highlighted here, we have a down day. We had a down day on Thursday of -2.7%. We had a down day on Friday of -2.2%. If we have another super negative day, the low extreme to the October lows would bring us down 2.65%. Now, we've had in the past, you can have 3-4% down days. I'm going to be a little bit surprised if we don't have, if we reach this level and we don't begin to see a more two-sided trade at some point. And this is something else I'll get into more detail tomorrow night, but even if we're going to do one of these waterfall crashes like we had in March 2020, they're going to be along the way these incredible rallies that'll just be relentless and furious for a day or a day and a half or a day into the first hour of the next day. We haven't had that yet. It's coming. Now, when it starts is a guess, but it is coming. Okay, let me see my notes here. Okay. Next up, technical situation. Let me go to, let me find the page I want. Here we go. All right, this is VIX, the Volatility Index, and we closed right at 30 on Friday. Now, you can see we can go a whole lot higher. This was the VIX back in March of 2020. So, high is a relative term, but you can see we typically don't spend a lot of time above 30, and lows are highly correlated with high VIX. Now, high again. Once again, high is a relative term. So, next week we could have, VIX could spike up to 35, 40, who knows? This is as high as it got in March 2020. Again, I don't know. But even if VIX is going to reach the levels we saw in March 2020, the tenets, the rules, the laws of auction market development will be in play, and it offers opportunity. Volatility is opportunity, especially if you understand market development and you have a way to measure what's going on, and you're assessing the probabilities through this lens of auction market concepts. Okay, let's take a look at breadth, which brings me, that's a nice segue into breadth. Well, where's the chart I want to show? Okay, and once again, I have highlighted the green arrows are negative 2000 breadth readings. Now, this lower panel, the blue line, is simply breadth, NYSE advancing minus declining issues. And we're in one of these panic type of phases, and it really began. Something was different beginning in November. You didn't know it then, but then you had another negative 2000 breadth reading that led to what is the all-time high to this point. And now since this high, we've had 3 negative breadth readings, closing breadth readings of negative 2000. Technically, Friday doesn't qualify because it was negative 1966 on some data feeds. I'll bet it's negative 2000. It's close enough that I'm going to count it. You can also see clearly this level right here that it looks like we're heading into it. And I think we will reach this level ultimately. Now, are we going to reach it before we have some sort of face ripping rally? Who knows? The 10-day moving average of advancing issues is now reaching an extreme. The 5-day moving average has reached an extreme that we haven't seen since the March 2020 lows. And it did go considerably lower. We had fluctuation in there, but you can see just since I'm here, this was the phase off. This was the initial phase, and this was the most momentum in the decline that ended on at the end of March. And this was when we had 7 consecutive lower closes, which ultimately led to the initial face ripping rally that carried almost 10%. So that even if we're going to do one of these waterfall crash declines, you're going to have these ripping rallies like this. Now, because the momentum is so strong right now, I think those rallies should be sold. And at this point, I don't know when that rally will begin, but I do think we're closer and closer to it. All right, let's take a look at this view. No, that's not the view I wanted. Here we go. Okay. That's not the view I wanted either. Oh, here we go. It's on another screen. This is the SPX. This is a 240-minute chart. It's basically each bar is half a day. And we are between levels. We are truly in an elevator shaft. We're in the abyss. The next level that from an objective perspective, that I think is potential support, it's certainly going to be an inflection point, is down here at these October lows. Back to the upside, the beginning area that I would be very interested in seeing how this market acts and maybe positioning short exposure, it begins at around 4,500. So Sunday evening is going to be interesting. Monday will be interesting. I hope I'll see you. I'm going to do that webinar on Monday evening at 6:30. You can sign up using the report. You guys have a wonderful remainder of your weekend, and I'll talk with you soon.